Hello, everybody. This is Elihu,
And this is Peter.
and you're listening to Pineapple Chunks.
Too sweet to be sour, too nice to be mean.
And on today's episode, we're going to brush up on Jerome Powell's speech today regarding inflation rates and all that cool stuff.
The Federal Reserve's guidance, ultimately, on what they're going to do.
The path
with
to
Fed
the
funds
light.
rate. Yeah, really.
The path you want to be on.
Jerome Brady.
We're also going to talk about Stripe, Square, the future of fintech in the United States in comparison to China's current situation. And then we're going to segue into how you can invest into private companies as a normie.
Safely. Well, it's never safe. But you will be able to at least get your fair share.
And you'll lose all your money too in
Yeah.
the process.
Yeah.
So.
Listening to us, you'll lose all your money. I don't know about anybody else, like your financial advisor. But let's get right into it. Let's go into what Jerome Powell said today. Let me just read the guidance. Let's watch the video. It's probably much more
Ended many
entertaining.
lives and created great uncertainty about the future. Overall inflation remains below our 2% longer-run objective. Over the next few months, 12-month measures of inflation will move up as the very low readings from March and April of last year fall out of the calculation. Beyond these base effects, we could also see upward pressure on prices if spending rebounds quickly as the economy continues to reopen, particularly if supply bottlenecks limit how quickly production can respond in the near term. However, these one-time increases in prices are likely to have only transient effects on inflation. The median inflation projection of FOMC participants is 2.4% this year and declines to 2% next year before moving back up by the end of 2023. The Fed's response to this crisis has been guided by our mandate to promote maximum employment and stable prices for the American people, along with our responsibilities to promote the stability of the financial system.
So pretty much while he was, swallowing his saliva there.
Aside from the nice ASMR.
Yeah, he's pretty much just saying they're not concerned about inflation. 2.5% is super low for their, and it's right on par with their inflation targets. So then that also means they're not going to raise interest rates. So, and he even says it in this this speech there that they're not going to raise interest rates till 2023. So that's pretty good. That's pretty damn good. And he also mentioned here when they put out their press release that they're going to, so it says the Federal Reserve will continue to increase its holdings of Treasury securities, which is bonds, by at least $80 billion per month, and of agency mortgage-backed securities of at least $40 billion per month. So they're increasing their purchase amount to maintain the market afloat. This, though, in effect, raises yield on bonds. So it might be a little interesting to see bond yields go up, and that will pretty much, it would kind of affect growth, but who knows now. The market doesn't really show much care for fundamentals and all this stuff with in regard to what finance classes teach you or economics classes teach you.
So what I'm getting at here is that essentially inflation rates are what are guiding the bull market. Am I wrong there? Am I right? I think it's safe to say that the bull market right now is heavily fueled by the low inflation rate and low interest rates. And the fact that in 2023 is when we start seeing a rise in interest rates.
Yeah, that's when he says they expect to. They might do it earlier, but what they're saying right now is guidance is 2023.
Then hopefully, in these 2 years to come, we have a good amount of opportunities to make as much money as we possibly can.
Well, we do. It's just like you have to have access to credit, and you also have to have capital available to you.
Credit is very important.
So, I mean, although inflation, let's say the consumer price index, which is the most common measure of inflation, which pretty much just measures, in a sense, the typical purchases that a household makes. So milk, eggs, bread, transportation, the gas you get to the supermarket and all that stuff. It pretty much tracks these single items. It actually chooses items that they think people need to live, and they track it every year. and they say, how much did the price of these items increase from last year to now? Okay, if it increased 1%, then inflation is only, increasing by 0.25% or whatever. It depends on, the amount of time that they're measuring, but that's pretty much what the inflation measurements that they're looking at. And 2.5% a year, that's pretty manageable. The price of your eggs, your supermarket groceries, whatever, increasing 2% a year. Like rent increases more, like with 5% a year most of the times in some deals. So considering that, it's not that big of a worry. However, we are dealing with inflation of asset prices, as we've seen in the stock market, we've seen in the real estate market, we've seen in the crypto markets, et cetera, et cetera. So in the investment space, and I think that the reason for that mostly is because of such cheap capital. Because of the fact that money is so damn cheap, the people with money and access to capital are buying these assets because screw it, you can't travel anyway. You might as well buy another house. You might as well buy some Tesla. You might as well buy some McDonald's, Johnson & Johnson stock, and use it on margin, whatever. And so that bids up the prices in a sense. So I think 2020 is going to be a hell of a year, bro.
2020?
2021.
2020 was a hell of a year.
It was a hell of a year, but 2021, 2022, I think is just going to be so good. Consumer based. It's going to be booming. People are going to be so caught up with being, done with being inside. I think people are already that way.
But I think, something that we mention on the show quite regularly is that inflation is still going to come, right? And it's important to protect yourself against inflation. And in order to protect yourself, it's important to put your money into assets that will increase in value over time in order to hedge against inflation.
And preferably also pay you out, like a dividend or an annuity.
Yeah, that's also quite nice.
Yeah,
but
nice.
if you don't want to deal with the stress of timing the market or whatever, just put your money into work. Make it not devalue over the years. And one way you can do that is by investing in the stock market, specifically.
Or private investments.
Specifically Square, which is what I'll be talking about, and Peter will also be talking about in this episode today. And Stripe, as some of you may have heard recently, has now been valued at a $95 billion valuation, making it the second most venture-backed company in the world, right? Before ByteDance, which is the owner of TikTok, a Chinese company. So if you can you pull up the valuations leaderboard? It should be
this one.
No. Next one. Oh, that's not it. Oh, I guess I didn't send you the link. Here, I'll send you the link right now.
This is the next story. That means there were... And then also, just because of the delay... Should I open this up?
Yeah. Oh. Yeah. Okay.
Perfect. We're back.
So if you keep going down.
Okay.
Nice little chart here. So we see Stripe being, the second right before ByteDance and
so that's
right
TikTok,
after SpaceX.
just for those of you who don't know, that ByteDance is TikTok.
Yeah, and this is really interesting because Stripe is a main competitor of Square and PayPal and Apple Pay. And these are all, what do they all have in common? They're fintech companies. And they are, redesigning the way we deal with transactions with either e-commerce or brick and mortar and the speed of it all. And it's basically, a bank branch in our pockets because of these technologies. So I know ARK Investment Group is heavily invested in Square. I think that's their largest position, and for good reason, right? So let's step back and look at China. Let's look at China right now. In China, their infrastructure is very dependent on apps like Alipay and WeChat. These are super apps that pretty much govern the entire transaction infrastructure in the country. So, you're basically paying for anything with these two apps. And that makes them very, very difficult to get rid of. they have become integral. They're ubiquitous. And the reason that they were able to get to that level was because of several innovations that China had and several, advances that they were able to do because of the culture. I know red packets became a very common thing with WeChat, where people just send, families and friends money as forms of like congratulations. That's like a culture thing in China. And, WeChat was able to monetize that by making it almost like a digital way of doing that. Instead of sending red envelopes with money physically, now they're able to do that through an app. And that has increased their revenues significantly to the point where they've been able to expand and become so powerful and so omnipresent that they're just undefeatable.
So what you're saying is that you think the United States is going to slowly over time shift into this aggregator of apps that is mainly controlled by a few companies for payment processing.
Yeah, so I don't think it's completely out there, for the US to look at China and start kind of copying what they've been doing. Mainly because, if you can be the app here in the United States that does what WeChat or Alipay did in China, then you will be, reaping a lot of rewards.
Well, doesn't Facebook have that prime ability to do it? Facebook is probably the leading person to be like the aggregator of payments and apps and things like that. PayPal's also really has a lot of market share. I use PayPal a lot to buy things. It's much easier. And
PayPal is probably Stripe's biggest threat, but the thing that Stripe has, going for it is that it's a relatively newer company. There's a lot more growth opportunity. PayPal has been around for a while. They've kind of solidified their, position, and a lot of innovation has already kind of happened with them. And maybe they can do more. Maybe they can be valued at more. But in order for them to make big moves would, require a lot of capital to enter their company. But whereas with Stripe, they're still public. They're not private. They're not public.
Private,
they're still private. They're not
Stripe
public.
is private.
But
they're used by Uber. I know that.
Look at other partnerships. Let's pull up the partnerships.
Is it up there?
So look at one of the tabs.
Oh, okay.
One of the other tabs. Not that one. The next one. So if we scroll down, they have Slack, Zoom, GitHub, Twilio, Salesforce, and we keep going. They have way more.
DoorDash, Lyft, Instacart, Uber. Wow, they're like the Cleopatra playing against the competitors Uber and Lyft. Kickstarter, but only a few of you are probably going to get that joke. Postmates. They work with nonprofits. Habitats for Humanity, very nice. American Cancer Society. Charity Water. Charity Water is cool. You hear that story of Charity Water, the founder?
I haven't.
He was like a club promoter in New York, and he was like had like a super hot model girlfriend, making a ton of money, doing a bunch of cocaine. And then like eventually he was just like, this is a meaningless life.
They started Charity Water?
Yeah, and like he went traveling somewhere in like Africa or something. He saw that not everybody in the world has access to clean water, which is crazy to me too. Very inspiring story. When he started raising money.
Oh, that's awesome.
For charity.
That's actually a really heartwarming story.
Yeah, they're pretty cool. Pretty cool. We should talk about them sometime. But anyway, going back to what you're saying, Stripe has a lot of market share, huge valuation privately.
And if we look at Square's partners, if you go to the next tab, right to the right, Square's partners, they got a lot, but they don't have crazy, brands like Stripe does.
Yeah, Square's more for like small businesses. Stripe looks like it's for big business.
Well, the thing with Stripe is that their API is very simple to integrate.
Oh, Automatic is the owner of WordPress.
Yeah.
So hey, they do work on Squarespace. Oh, Squarespace is a website builder.
And Wix. They also have partnerships with Shopify, which I think is massive.
It's huge. No, they're definitely neck and neck.
They've governed the e-commerce, payment processing world. PayPal is also in there too, but they're doing super moves. The Collison brothers, very smart dudes.
Shopify, WeWork, jeez, Fender guitars, Zillow. Damn.
Yeah, they're doing great things. The thing with Square though is that they've really tapped into the hardware, the POS system industry, right? If you go to a brick and mortar, you'll probably encounter, you know, the swipe, the Square chip attached to someone's phone, and they can just swipe your card, and you know the payment happens. So that's something that they've got going for them. I know they're also involved with banks. I know they're also starting their own bank in order to like fund companies and give out loans. But what's interesting with these companies is that they also use a lot of analytics through like AI, because they have access to all your transactions. So they can see at all points in time how your business is doing. And that creates a good amount of feedback for your business, what loan rates you can get, how you're going to pay them back. You know,
oh my gosh. Wait, so Square has a market cap of $110 billion.
Yeah.
And Stripe has a market cap of 95 billion, and they're still private.
Exactly.
Oh my gosh. So,
So
Stripe is by far way bigger than Square. When Stripe goes public,
you're gonna want to get in there.
Damn.
You're gonna want to get in there.
Not recommendation, because you will lose money, but still
You will lose all your money when that IPOs. That one day you're gonna lose all of it.
that's wild. And then ByteDance is double what Stripe is, but that's TikTok, man. Gotta get on TikTok, bro.
Yeah.
Jeez. But anyway, Stripe, $95 billion valuation. Square's valuation's at 110, and this is already public. Jeez. This is gonna be crazy.
But then if you look at these rates of growth, and you look at what happened with China, it's like, which one of these will be the Alipay and the WeChats of the United States?
I think it's tough to. I don't think it's gonna happen.
You don't think it's gonna happen? I think it.
Nah.
I think it might. I really do. I mean,
If we ever do have that, though, we'll be like China, and I don't want to be like China.
yeah, no one wants to be like China.
We're
Nothing
kind of
against
becoming
China.
like China, though. I don't know. I don't know if we're becoming China. China only wants the best for us, okay? They only want us to do good, and they love us. But I don't want to be like China at all. But still, I think if there is like a main payment processing system that is like an Alipay, it just leads to too many. It just also messes with our ability to at least try to be anonymous with our payments, in a sense. Like Alipay, like all these WeChat apps and payment processing apps in China, they screw any dissenting group of people against the Communist Party, the Chinese Communist Party, because the Communist Party has ownership in every one of these companies and can pull up the roster and see like who's buying bus tickets to this protest in Hong Kong or whatever. It's not to say that the government won't do that here. Like, you know, all businesses, if the government asks, the business is gonna be like, here you go, government.
Okay, but I guess the point I'm trying to get at is
to be one,
forget
though, I don't
about
think so.
forget about the government involvement with WeChat and Alipay. It's more so like Stripe, PayPal, Square. Which one is going to get the majority market share and get so ubiquitous into every, you know, transaction that we make anywhere?
Stripe.
Yeah, right.
I think
mean,
business to business, and then also business to consumer.
So it's almost like, where do you want to put your eggs, in which baskets?
Oh,
You just
Stripe.
want to put it all
Yeah.
in one basket, or you want to diversify? Because this is kind of where we're heading, right? I mean,
It's. I mean, I think it's gonna take majority market share, but I don't think it's gonna be the monopoly, in a sense.
no, I mean, we're not gonna have a monopoly. United States does not condone monopolies.
Well, we kind of do though.
Yeah,
look
there
at
was a pinch of
Look
sarcasm
at
when I made
Google,
that
bro.
phrase.
Google.
Uh,
Like, what is that? 95% of all search traffic.
it's ridiculous.
Yeah. Well, I mean, everybody else can fight for the scraps, but
Yeah. But yeah, the Collison brothers, they're from Ireland. They're the CEOs or the founders of Stripe. Really smart dudes. Look into them. Look at some of the interviews they do. Awesome. And just get ready for when Stripe
they gonna
ever goes
IPO?
public.
do you know?
They're not going to IPO yet. There's no news. But with this current evaluation that they were given and $600 million raised in their last crowdfund, and it's looking that they might, you know, direct list, if anything.
I know Bill Ackman rejected them for his Pershing Square SPAC. He hasn't picked a company to merge with. So, yeah, so let's see. Bill Ackman.
One thing's for sure, Kathy Wood's definitely going to invest in this.
Yeah, I would be surprised that if she hadn't got a little bit. So for Pershing Square, PSTH, which Bill Ackman, for those of you who don't know, he's the guy who made a ton of money on the coronavirus. He shorted the market. We've talked about him before. Many investors, especially retail ones, have flocked to PSTH stock because of him. Ackman, the CEO of Pershing Square Capital Management, is known for being a contrarian investor. But they're not going to merge with Stripe. They were in talks, but Bill Ackman said, what did he say? No such deal. Well, first of all, one of the founders of Stripe said no such deal. So he does not like he didn't even wanted to merge with Bill Ackman. But hey, whatever Ackman picks, I'm sure it's going to be good. But it was just rumor. Okay, so it's not happening. Let's go to the next story. Are you done with this?
Well, yeah, I mean, now we can go into microventures, which is, for all you normies who want to invest into private companies. There we go.
So microventures. Oh, okay. You can shut up there. Microventures. So you can invest in private companies with this platform called Microventures. And Microventures is a reputable company. I know Dumb Money uses them. They've actually not recommended them, but
look, we got Headspace on there.
Headspace, yes. So you can invest in Headspace. The app that has 65 million users and has generated a total annual revenue of $100 million that helps you meditate. Yeah,
and also has a Netflix special, which is really good. You guys should check it out.
Yeah. You can buy them. You can actually get a piece of ownership before they go public. And it's common stock, but still, this is what you're going to be getting in the market. So you can have a piece of them. So they've raised $491,000 through Microventures. And let's see, how much is the minimum? Let's say if we want to invest. Minimum is $10,000. You got to have some money. $10,000.
That's for sure.
To get, I don't even know how much you'd get. So if I put in $10,000, let's go ahead and I'm gonna invest in Headspace. Let's go. Let's see how much you would actually get. What equity amount? It's asking for my info. Well, I'm not gonna do that. So let's see if it tells you. Nope.
Doesn't look like it.
Well, if you look at it, you'll probably be able to do it. But you see, this is their pitch deck.
Why is General Electric there?
General Electric?
Is that not the General Electric logo?
More than 1,300 businesses have used Headspaces on job mental wellness tools, including Starbucks, Adobe, General Electric, Hyatt Hotels, Unilever, Artesia, General Mills, Cereal, and more. Company has worked with 15% of Fortune 100 and 20% of Fortune 50 companies. Additionally, Headspace supports government entities like New York State and UK National Health Services to offer digital mental health tools. Yeah. And then they have the Netflix special that you were talking about. So, I mean, I don't know. I know meditation is increasing in popularity. Especially, they say, because of the pandemic. Since the onset of COVID-19 pandemic, the app has seen notable growth with downloads of up to 20% over December 2019 by mid-March 2020. Wow.
But this is cool, right? So they give you companies and they give you little small summaries of information and data to help, kind of pitch that they're themselves.
Well, they give you a lot of data.
They give you a good amount of data here.
Yeah, no, they give you everything like a real investor would see.
So, I mean, yeah, this website is phenomenal.
I mean, 10 grand is not, it's nothing, but it's not nothing at the same time.
Yeah, it's not, yeah.
And then there's also,
but you could also just go halves and halves with your homies.
Yeah, you could do that. Yeah, that's true. Then you also have, Label Box. So this one, no, wait, this isn't. Oh, let's see what this is. I think Andreessen Horowitz invested in these people. Warner Brothers, Andreessen Horowitz. So backed by investors such as B Capital Group, Andreessen Horowitz, which are one of my favorite venture capitalists. Whatever they invest in, just
throw your money at it.
Dude, booms. They're amazing.
You probably won't lose all your money with that.
Facebook, Lyft, Uber.
Oh, Kathy Woods.
Oh, Kathy Woods. The third, maybe? Imagine it's like not Kathy Wood. Like not the Kathy Wood. No, it's Kathy Wood's third.
It's just like a bot replica.
Software used by universities such as Stanford, California, Berkeley, Carnegie Carnegie Mellon, and Columbia raised over $100 million in funding since inception. Excellent. And over here, it's only raised $195,000. Opportunity. Development of new technology applications powered by artificial intelligence, machine learning, and other cognitive technologies continues every day. Currently, AI technology is being used to automate repetitive and boring work that historically took service workers or expensive office workers' time. However, as technology in the field advances, AI could begin to overtake human organizations. We'll take the front. So what do you do, yo? Entire data.
It seems like they just help with like work.
Pre-labeled assets, trained models of optimization. I don't know. I saw Andreessen Horowitz invest in them. Labelbox is it's a trained data platform built with 3.
It's so much shorter too, dude.
Yeah, they basically just they help automate tasks. They help companies automate tasks. Interesting. I'm definitely gonna look more into this. We'll probably I don't know. I'm gonna look into this actually. Wow, they have artificial intelligence doing things for exports. So how much would it take to invest in these guys? Minimum investment, another 10 grand. So
seems like that's just the base level for any one of these.
Yeah, I mean, listen, 10 grand to invest in Labelbox, a company that Andreessen Horowitz is invested in, or 10 grand to buy a house, as down payment in a house or an apartment. I probably would do the condo or the house. I mean, unless you just have a ton of money, but who knows? I mean, I'm not recommending anything, but this is pretty cool. You know, the big benefit of investing privately before a company goes public is just the fact that you get to get in early, and then if the company goes public and it does well,
you also don't know when they're gonna IPO.
Yeah, they might never IPO.
They might never IPO.
But ideally, they probably will. I know Andreessen Horowitz takes companies public. They typically do that. What's their valuation? Terms. Amount raised, valuation not applicable. Don't like that. Price per share, $5.85. So $10,000 divided by 5.85. You get 1,709 shares. Is that right? Is that how you do the math? Yeah, right? $5. Yeah, so you divide at $10,000, you get 1,709 shares. So if the company goes public and suddenly it's gonna go, Andreessen Horowitz is behind it. It has to go up at least $10 a share. You can double your money. You can make 20 grand with 1,709 shares.
The catch is also you just don't know when that's gonna happen. So
yeah.
But hey, you have an in. You know, you're a normie and you can now invest in private companies.
And it's preferred stock.
Oh, nice.
That's good.
That is good.
That's way better than common. Security offered common share. What? It says common shares up here. But then it says okay, well, whatever. Anyway, you'd have to do more. You definitely don't want to invest in this if you're doing the amount of research I'm doing right now. You don't. I just want to look at the terms for Headspace. What's the valuation? $797 million. Price per share is $4.73. So if it goes public, typically these companies like that get a lot of hype, like they go public with big valuations. I mean, a good price per share. So I remember Bumble recently went public and they were initially being offered for at least $60 a share. So the bank, the bank might determine, hey, like these are way more, this company is way more valuable per share, and like you actually would probably make a lot more money with that $10,000 investment. If Headspace ever does go public, will it? I don't know.
They have that brand recognition too.
Yeah.
So I mean that, I can see that.
But if they do a SPAC, it'll start off at $10 a share.
Oh, that's true.
So
which is even better. That's already more than double your money.
Yeah, you'll still make money.
73 cents.
You'll definitely make money. But I would probably bet more that Labelbox, backed by Andreessen Horowitz, which Andreessen Horowitz is taking way more companies public, would do better than Headspace. But I don't know. Maybe somebody else disagrees. I have to read more about this. And just real quick, let's do a definition of preferred shares over common stock or common shares, usually you get more benefits with preferred share. Okay, the main difference between preferred and common stock is that preferred stock gives no voting rights to shareholders, while common stock does. Preferred shareholders have priority over a company's income, meaning they are paid dividends before common shareholders. So I'd rather be a preferred shareholder. Common share stockholders are last in line when it comes to company assets, which means they will be paid out after creditors, bondholders, and preferred shareholders. So common shareholders are like those power-hungry guys who just want to be able to put in their vote. But the preferred shareholders are those money guys, and those are much tougher to get.
It's just the preferred, way of owning stock.
Yeah. All public companies give you common shares. So you do get voting rights, but you're not entitled to assets or dividend payments before anybody else. Sometimes, Coca-Cola will give dividend payments to common shareholders, but they have to make enough money, which is tough to do in this dog-eat-dog world. Actually, have you ever seen a dog eat another dog?
I think that's a myth.
It's a dog-eat-dog world.
I think it's a myth.
I've never seen a dog eat another dog. I've seen a dog attack another dog, but I've never seen it eat another dog.
I mean, maybe we're just not seeing it because, I don't know, we don't really, hang out around a place with a lot of hungry dogs.
I doubt dogs eat each other.
Well, thank you everybody for listening. I think that about sums up today's episode. Let us know in the comments if you've ever seen a dog eat another dog, and if you've invested into a private company using microventures. We'd love to hear about that experience.
Yes, please let us know. Don't forget to like and subscribe. Really helps the channel. And also tweet out Dumb Money if you really support us.
Yes,
tweet
please,
at Dumb Money TV. Tell them that we're the shit, that you want to see more of us, and that we'll rock their socks off if they give us their channel. So thank you so much.
We love you. Stay cool. So long now. Bye-bye.
You will lose all your money.
All of it. All of it. All of it. All of it.
Hey.
Gone.
Hey.
Gone.
Hey.
Gone.
Hey.
Gone.